Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Thursday. In today's program, I just want to have a little chat about how the market is trying its best to fight off a 5-day losing streak and actually end the day with some gains, plus some disappointing data coming out of the UK, and have an open conversation about the potential future of Tesla. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. So I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yeah, like I was saying, they're trying to break a losing streak. And they are really, stock market is really trying to sort of fight back. I mean, the S&P 500 yesterday, registered its fifth straight losing day. And like I say, for the day at the moment, is trying to fight back. We'll have a look at it, look at the heat map and the charts on the equity market in a moment. And the thing is, the S&P 500 is actually down by 3.6% so far this month. Obviously, we know the reasons why, because obviously we had that very good job data last week, the NFP, which goes to show that the labour market in general, which we'll talk about today, because we have some job data coming today as well, which I want to talk about, but shows the labour market is pretty strong, and so basically the market's under pressure because this hope of a Fed pivot next year is slowly vanishing. Not that I ever think there was any hope of Fed pivot next year anyway. But anyway, doesn't matter. But it's trying to fight back. The NASDAQ is also trying to fight back as well. That's currently down this month by 4.4%. And that's the worst week for the NASDAQ since December 1975. So let's have a quick look at the heat map, actually. Have a quick look at how the market's open, because there's a bit of green today on it. So this is the S&P 500. Like I say, so if I move myself out of the way, you can have a look at it. And that one's a bit bigger, please, James. There we go. That's better, so you can see it. So we have got a bit more green today on the S&P. We obviously with the Microsoft up slightly higher. Google is down 1.10% at the moment, and even Tesla. I'm going to talk about Tesla in a minute. Is up by 0.1%. So we're going to have to talk about Tesla. So we've got basically generally in the green at the moment in the market. If we look at year to date, though, year to date in general, not been pretty. A lot of red across the S&P for year to date, so not pretty at all. If we have a quick look, say at the market as well, where the S&P is. And so this is where it is at the moment. Like I say, this is on a 30-minute. On a 30-minute, it's trying to get a bigger gains. It's capped at the moment just below the 3,975 points. If you look on a daily, however, look on a daily again, we've had 5 days of losses for the S&P 500. It has found support for the time being around that 50-day moving average of 3,906 points, but really it's still under that 200-day moving average. So even if we end the day with gains, it's still nothing to celebrate at the moment. Till we break that 200-day moving average, we can't consider the S&P bullish at the moment. Anyway, moving on, and now something else I want to talk about now, obviously, is Tesla. I mean, there's big concerns about Tesla. We saw it on the heat map just a minute ago. There's more concerns now, which is like a lot of pressure, because there's reports circling that the EV maker plans to shorten shifts in Shanghai. And this is greatly going to affect their output. And saying, don't forget, okay, they've had so many issues this year with Tesla. So many issues. Okay, you had that lockdown issues when the Shanghai plant was locked down for a good chunk of this year because of China's zero COVID tolerance policy. Okay, so they've had huge issues with that. They've got recession concerns. There is demand slowing, especially in China for Tesla. But something else which I think is more worrying, and we'll have a look at Twitter at the moment, not Twitter, at Tesla, is this Twitter saga. It's this Twitter. Now that Musk is taken over Twitter, and he is absolutely transfixed to trying to turn Twitter around. I mean, the latest story is some of the conference rooms he's turning into bedrooms now, so his staff can stay and sleep. And it's hardcore work ethic. So apparently he's making it into a hotel for them. The big concern with all this drama with Twitter is that he's not going to be able to manage Tesla. And the number of shareholders of Tesla is greatly concerned that his eye's been taken off the goal of looking after Tesla or helping Tesla. So this is a real big issue. And I think this is a big story. And like I say, Tesla's share price is actually down so far this year, as we can see on the heat map, 55.71% year to date. And I think, the way Musk likes to get in the headlines, certainly all this development with Twitter, I do see a big concern for Tesla. I really do. Like I say, it's been under a lot of pressure, 55.71% down to date. The only other big company which is down worse than that on the S&P 500 is Meta. So they're down around about 65%, 64% this year, I think. So it's only Meta really stands out even worse than Tesla at the moment. But let's have a quick look at Tesla, see how it's trading at the moment. Let's pull it up. Excuse me. So obviously this is on, so we look at the 30 minutes. Okay, it did open slightly lower. It's spiked down lower today on the open of that rumor that they're circling about, obviously the cutting shifts. It spiked down to $167.95. It seems managed to recover off the lows, currently trading $172.39. But if you ever look at it on a daily or bigger picture, again, like I say, it's way under the 200, way under the 50. Okay, it's not massive movements. We had a big gap back in June, but you have a look at where it's trading back in April. Where we were before Tusk and the Twitter saga began, all the way up here, $1,099. And now where are we? We're trading $172.22. So pretty worrying times for Tesla. Something we need to keep a very close eye on, especially with all the recession concerns on the horizon as well. Other news. The US labor market. I know we talked about the NFP being a really good number, which it was, 263 versus 200,000 expected last Friday. However, initial claims was announced today. Not enough to get the bunting out to celebrate, or for the Fed to celebrate and say good job or job well done. But it was announced, the initial claims of 230,000. And that's the highest reading in 11 months. So that is a slight good sign that maybe, just maybe, we're beginning to see some cracks in the labor market. Continuing jobless claims also was announced, higher than anticipated, at 1.67 million versus 1.57 million expected. Now, this is an important number. Okay, initial claims, yes, it's like I always say, it's like a canary in a coal mine. I see it as an early warning signal, for things are starting to get bad. But continuing jobless claims is a big number. It's a number worth watching because that's an increase. That's also the highest in 11 months as well, highest since February this year. But this number means it's beginning to get difficult for people to find new jobs. So when people lose jobs, it's getting more difficult to find new jobs, hence the continuing claims. But continuous claims have been pretty good, showing that the labor market is still robust. So somebody may lose their job and take initial claims initially, they find a new job quite quickly. But this number is showing that just now, maybe, it's getting a little bit difficult to find jobs. So maybe, eventually, at last, finally, are we seeing the labor market start to crack? So anyway, only time will tell. But like I say, that is a slight blessing. The market had a bit of a boost on it today. It was about because of that. But again, I don't think 230 is not that dramatic. Bear in mind, last week it was only 225. So only a slight increase anyway. In other news, UK house prices fell to the most since the pandemic. And this is increasingly worrying signs, obviously, because the housing market in the UK is massive. Obviously, the increasing in interest rates is obviously increasing borrowing costs. It's skyrocketing, making it very difficult to get on the property market. It's very difficult anyway to get on the property market nowadays. With high inflation as well, a cost of living, the housing market is now really beginning to feel the strain. And the thing is, there is going to be more rate hikes from the BOE on its way. More, I'll talk about that in a moment. So that's the other thing about it. As well as that, don't forget, previous quarter forecast suggested the UK economy shrank by 0.2%. This month expected to show a decline of 0.4%, which means technically, the UK will be in a recession, which we're all expecting anyway. So there's going to be no big surprise, but at least this will confirm it. JP Morgan believes this is going to be a big thing. And actually, they predict if for next year, the British pound to fall by 11% against the US dollar in 2023 and trade around 1.08 level. Now, I have no doubt that next year, with the UK in full swing of recession, the sterling will get under pressure. I have no doubt. 1.08, I don't quite see that, though. I actually see it slightly higher, around the 110 level, but in the medium to long term. But anyway, let's have a quick look at the market, see how the sterling is doing today, not next year or not after this information. If you look at sterling first, oops-a-daisy. Look at sterling first. Here we go. So yeah, okay, like I say, on the daily, still trading above the 200-day moving average, still slightly bullish, so still holding its own against the US dollar. On the 30 minutes as well, again, it's trading above the $200-day moving average and the 50. Currently trading at 122.18, so round above the 122 handle again. But like I say, again, on a daily, more importantly, if we look at a longer time, it's still that key level, 121.092. Not an awful lot of movement today. Obviously, like I say, it was like this morning, it's range bound. I mean, I tell you the reason why there's not a lot of movement today, because something else is coming up very, very soon. Anyway, so yeah, 122 for now. The euro back above the 105 handle, very, very similar. Movement, slightly more dramatic movement today for the euro. Key level for me to watch is trading at the moment 1.0561. Key area for me, key potential resistance is 1.06017. Again, this is trading above the 200-day moving average as well. Dollar yen. Okay. Capped. Remember, we spoke about it this morning, didn't we? It was trying to challenge that level, just above 136.87. It's capped at that level at the moment, which is the 38.2% Fibonacci retracement ratio. Still trading above the 200-day moving average, though, so still slightly bullish. Gold is making a little bit more of a fight back. God bless it. However, it's still got a long way to challenge that key area of $1,803.50. Like I said, I have a feeling come the future or come in the next couple of weeks or certainly months, gold will start getting its shine back, especially when we start approaching more recession fears. Again, for now, it's trading above the 200-day moving average, which gives it a key area of interest of $1,759.59. Okie doke. So anyway, that's pretty much been a bit of a sideward day today. Like I said, the market's trying to fight back. The only thing coming up or left really on the financial calendar this week is U.S. Michigan consumer sentiment, which is due tomorrow. However, don't forget, next week we have potentially a huge week ahead of us. Absolutely huge. This is why I think the market is a little bit sideways at the moment, because the market is waiting for next week, which is going to be the last real big week of 2022. And I tell you why. Because next week, this is just a handful of stuff we've got coming. Next week, we have US CPI, UK CPI, Fed interest rate decision, Bank of England interest rate decision, and ECB interest rate decision. Expectation is all three of them to do 50 basic points, but it's going to be that CPI reading for the US. It's going to be potentially massive. UK for CPI for UK, but really it's US CPI and the Fed. It's going to be absolutely massive. It's almost like a perfect storm next week. Perfect storm. Anyway, as the markets currently trade or currently stand, equities, S&P, like I said, in the green, 0.83%, trying to have a better day. NASDAQ currently trading 1.15% in the green, and Dow 30 currently trading 0.70% in the green. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like. Or share me your opinions. Let me know what you think. Okay, not a problem. Don't forget, if you think of a question later, you can put it in the comment section either on Facebook or YouTube. I will see them, and I will reply to them next time I go live on air, which, of course, will be tomorrow. tomorrow, which would be at 9:30 a.m. UTC. And again, tomorrow, I forgot to mention as well, I'm doing a hashtag Ask James episode tomorrow, which is trading with multiple time frames. So please come and join me for that. That's going to be at 1:30 p.m. UTC. And again tomorrow at obviously 3 p.m. UTC to cover the US session and really to build up what could potentially be a massive week for us next week. Anywho, okay, if there's no question, don't forget, if you're watching me on Facebook and you've enjoyed this little video, by all means give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like, hit the notification button so you know next time I'm going live. If you enjoyed this video, find it interesting, useful, and you put up with me, my over-the-top enthusiasm for the markets, I can't help, and give me one of these. It's nice to know that you like what I do. Anywho, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.